Welcome to the webinar by ArthaYantra. In this webinar, we throw light on a new approach to personal finance. This is an integrated approach to personal finance and it's called Personal Financial Lifecycle Management. It is a trademarked and patented service from ArthaYantra. Let us start today's webinar with some of the questions that bother us. Questions such as, I earn so much, where does my money go? I made financial mistakes, how do I fix them? Can't I grow my money? How should I be growing my money? These are very common personal finance questions that we come across. The irony of the situation is, these questions that exist in the minds of thousands and lakhs and millions of people are unanswered even today. These questions are still unanswered largely because of lack of access to quality advice. If we draw a graph with personal wealth in y-axis and access to quality advice in x-axis, only the people who have high amount of personal wealth have access to quality advice. However, you can see the first quadrant in the bottom left corner where you have a large middle class population in this country who do not have access to quality advice. How do we actually provide them quality advice? This can only be done if we can develop new methodologies, new frameworks, new solutions that can leapfrog what is existing in the market today and provide innovative ideas in providing quality advice to everyone. Another important aspect that has a critical bearing on our financial future is our behavior when it comes to personal finance. When it comes to both health and wealth, we rely on New Year resolutions a lot to reach our goals. Talk about going to gym, starting to save more, starting to spend less. New Year resolutions or any resolutions are an important way for us to reach our goals. But how often do we meet our resolutions? Resolutions keep getting postponed. There's always a tomorrow for resolutions. The second point that you should look at is that hard work pays off only in the future. Laziness pays off now. We are all accustomed to sitting on a couch and looking at the TV instead of taking important financial decisions. Our financial decisions are not taken unless there is an emergency. So, all our financial decisions typically get postponed to March, which is the financial year ending. The third point about behavioral finance that we should look at is the whole concept of instant gratification. We are happy when we buy a pair of jeans or when we go to a movie because we get instant gratification. Saving for the future is all about sacrifice. Sacrifice where money is going into something unknown. You don't get anything in return immediately. It is being saved for the future, so you don't see it physically, so there is no instant gratification. The impact of the lack of access and our behavior when it comes to personal finance has a stark view on our personal finances. Today, if you look at the first point on the left side, we save much less than what we should be saving. We don't know what we hold. The products that we have bought over the past few years, are they suitable for us? We don't know about it. We always fall in the trap of the salesperson who is trying to sell us something. We don't buy financial products in the market today. We are sold financial products. This doesn't bode well for the future of a typical middle class professional. Our current financial state is impacted by the myths we carry. We carry a lot of myths, but we are covering the three most important ones we often hear. Number one, buying products from friends or uncles does not hurt. This is a myth that has hurt a lot of us. A myth that has resulted in people losing substantial part of their wealth. The second myth we carry is that we cannot save unless we have a lot of money to spare. This is not true. You can start saving even if you have 500 rupees per month to save. The third myth that only super HNIs get good quality advice is a myth we at ArthaYantra are proud to break using Arthos. To understand what we do, let us look at something that is not from the area of finance. We are talking about building a home. What do we do when we build a home? We first draw a blueprint, understand where our rooms are, where our windows are, where our doors are. Then start building the home and hopefully, happily live in it forever. Now, try building the same home without the blueprint. We will end up with a home that is not necessarily useful for us. While it may sound illogical for us to build a home without a blueprint, we often do the same thing when it comes to personal finance. Why can't we look at personal finance in the same way that we build a home? We at ArthaYantra look at personal finance as 3 islands: plan, execute, manage and monitor. Most of the industry today is in execute, which is very transactional and product centric, while there are some companies which help you only do manage and monitor. We believe that unless you plan, only execute the plan, and then manage and monitor the performance of the plan with a feedback loop, you cannot create a secure financial future for yourself and your family. We call it personal financial lifecycle management, and this forms the core of all the solutions we provide, and we have multiple patents and trademarks around this. Using personal financial lifecycle management as a core of our thought process, we have developed 2 solutions. The first one is an online platform that will help you to plan, execute and manage online. We call it Arthos. Arthos Beta, which is now available to everyone, will be free during its beta phase. The second service is a premium service, which is called Arthos Plus. It is for the professionals who are busy and who want someone to help them and handhold them in the entire personal finance process. As a next step, let us look at our platform Arthos. This is the landing page of Arthos, and you can see here that we have 3 steps in the whole PFLM process: plan, execute and manage. A customer who signs up for Arthos lands here first. He has to complete his planning first. The step 2 is execute. This is the area where you look at your plan, look at the recommendations that have been given in your plan and execute those recommendations. After executing the plan, he can then go into manage. Manage is where most of the customers will spend their year. Manage is a place where you will track how good or how well you're doing on your goals, how well your portfolios are doing. This is the place where you'll have all the information about your personal finance that you will need during the year. In the plan section, we try to address the various issues that we as individuals and families face. You can see here that a lot of these questions apply to most of us. The idea is to basically use this section to create a plan in such a way that we can address some of the questions that we may have regarding our personal finance. In order to develop a holistic financial plan for yourself, you will need to enter information about multiple things. These include your family information, your spending information, your assets and liabilities, your goals, and risk. The first section in data entry is the family section. Here, you not only enter your profile, but also the profile of all family members for whom you are going to create a plan. In spending, you typically look at the expenses that you or your family incur during the month or the year. In income, the various sources of income that contribute to a household are added. In assets, we take a note of all the assets that you have. Liabilities are the loans that you hold. They are automatically calculated and categorized as short-term and long-term liabilities. Once these 2 sections are completed, you are ready to plan for your future. Goals is where you start entering details of your future goals that you and your family would have. Once all goals are created and prioritized, we go into the final section, which is risk. In risk, we look at two distinct areas. One is insurance, two is risk appetite. In insurance, we use the expense-based method to calculate the life insurance required by you and your family. In the risk appetite questionnaire, we use behavioral finance to estimate and arrive at a risk appetite for you. Once you have completed filling all these sections, you are ready to look at your own customized financial plan. The advice section is divided into 4 different areas. Number 1, the current financial state. Number 2, the goal analysis. Number 3, risk analysis. And 4, investment planning. The idea is to basically understand your current financial state, look at your future goals, understand your risks, and finally use the above information to arrive at a portfolio that will help you reach your goals. In the current financial state, we try to objectively assess the financial health of you and your family. We do this in 3 different sections. Number 1, expense analysis. Number 2, net worth. And finally, number 3, through ratio analysis. All the recommendations in each of the subsections are provided so that you can understand your finances better. In the expense analysis section, we look at your inflows and outflows. That is, the money that is coming in through income and the money that is going out through expenses. In this section, we arrive at a surplus that you have in order to meet your future goals. In the overview section of expenses, you can look at your expense income and drill down into various aspects of these elements. You can drill down into committed and non-committed expenses. Try to understand the breakup by clicking on the graph. In the net worth analysis section, we look at your assets and your liabilities and arrive at a net worth. In this section, you also have the ability to drill down in each of the elements in order to understand your assets and liabilities and the way they contribute to the net worth. Finally, in ratio analysis, we calculate over 6 ratios in order to better understand your financial state. We look at ratios ranging from liquidity to debt. In the goal analysis section, we look at each goal objectively and try to provide unbiased and realistic advice. We use the information that has been provided by the current financial state to assess if a goal is achievable completely, is achievable only partially, or not achievable. In this section, we go into each goal and try to assess the amount of saving that needs to be done for each goal. The savings could be done either monthly or annually. In the risk section, we use the expense-based methodology to arrive at the life insurance requirement of the individual. The expenses that are calculated as part of the current financial state are used to arrive at the numbers. The insurance calculations are provided using multiple factors, including your expenses, your future goals, your unsecured liabilities, and your existing assets that are liquid in nature. The minimum insurance is the insurance that is required to meet the expenses in the future, while the maximum includes things such as future goals and unsecured liabilities. At ArthaYantra, we believe in term insurance. We believe that one should not mix insurance with investments. So in the recommendations, we clearly bifurcate all your existing policies, which are term and non-term. We recommend that you keep your term policies while assessing very objectively all other existing policies. Investment planning is the final step of your financial plan. In this section, we combine the information from current financial state, your goals, your risks, and the questionnaire that you have filled in to arrive at a risk appetite. Your risk appetite will then lead into a recommended asset allocation. In the recommended portfolio, we compare your existing assets with what is recommended. We allow you to then move your existing portfolio into the recommended portfolio in the recast section. Once you choose on the investments which you would like to recast into the new portfolio, we provide you with a final portfolio with proposed monthly investments and proposed one-time investment. The recommendations here include not just the asset classes and the allocation to be taken to each asset class, but also the instrument that is recommended. The instruments that we provide are the best-in-class instruments for the asset class. Our aim in investment planning is to create a diversified portfolio that can give you sustained long-term returns. Once investment planning is completed, you can name your plan. This formally completes the planning process. Once the planning is completed, it is time for you to execute the plan. In Arthos, execute happens offline. We provide you with the option of either executing by yourself or with ArthaYantra. Based on what you choose, you can move on to the next section. In case you choose ArthaYantra to execute, you get the benefits associated with having ArthaYantra as your financial advisor. The manage section is used to ensure that we can manage and monitor our plan. Currently, you only have the tracker facility available in this section. We have two types of trackers here. One is a portfolio tracker and one is a goal tracker. The portfolio tracker currently allows you to import the portfolio that has been recommended from the plan into the manage section. It will give you the ability to ensure that you are executing what has been planned and you are monitoring the portfolio's performance. The goal tracker is one of its kind solution that is available today in the personal financial industry across the world. It allows you to manage and to monitor your goals in real time. This completes the overview of Arthos, our pioneering platform that can help you plan, execute and manage your personal finance online. If you have any questions, we are willing to take them now. Please type in your questions in the browser in front of you.